What's going on, beautiful people? It's your real estate go-to, Deontay. Here, as always, with another reaction video. As you see on the screen, this one is about summer 2023 housing market forecasting. We're taking a look at this on the Bigger Pockets channel, and as you guys know, we react to these videos from industry thought leaders, industry professionals to kind of get a sense of what's being said out there and bringing it to our Orlando and Central Florida markets so we can see what we can keep from what people are saying and what we can throw away. So let's take a look and see what they have to say. And as you know, like, comment, subscribe to the video, drop comments in the comment section below as well. So let's get to it.
The craziest, least predictable housing markets in history. But we're going to try and make some predictions anyway. Yes, we don't have a crystal ball, but we do have some recent housing market data that provides some information about what could happen this summer. In this video, I'm going to share my top 5 predictions for the summer 2023 housing market and 3 big indicators to look for that could change everything. When I talk about the summer, I'm not using the actual calendar dates of June 21st to September 21st. I'm talking about the typical housing market summer, which are the 3 months of June, July, and August.
Now, as you guys know, Orlando, May, June, hottest in regards to units sold. But overall, summer is, right, the summer season is a hot time when you have people coming into the market, kids are out of school, people want to get settled before their kids go back to school. It's very, very common that the summer season is red hot.
And obviously, we're about to enter that period, so I thought it would be a good time to make some predictions about what's going to happen during what is normally the busiest time in the housing market. The last predictions I made were back in October of 2022, and I said that prices would fall on a national level in the housing market between 3 and 8% this year. And right now we're sort of entering that range. The NAR, the National Association of Realtors, has said that prices are down year over year at 2.5%, Redfin's at negative 3%, so we're just starting to enter that range. So far, I think the broad level predictions are good, but things have changed a lot since September, October. So I want to provide some updated thoughts on some of the details about what is going on in the housing market. Before we get to that, I just want to thank our friends at the Short Term Shop for sponsoring.
So definitely September, October, that's when the rates really changed for us, right? And it almost put things in a standstill. But now what we're seeing, people are just used to getting accustomed to, I would say, to the higher interest rates. And they're like, look, I still need to buy a home. I still, don't want to be paying these rents, and I need to get in the market whether I like it or not. So it's starting to pick up, and that's also keeping the prices in our area, Central Florida area, from dropping, right? The inventory is limited, so people are still going out paying list price and above to get the home that they want.
Sponsoring this video. Everyone knows that the most cash flow is in short-term rentals, but you may have zero experience hosting, or you may live in way too expensive a market to invest in. The Short-Term Shop can help if that describes you. With agents in over 20 top short-term rental markets, the Short-Term Shop can find a property for a property manager. I have an expensive.com/BP for more info. That's the short-term market. Number 1, mortgage rates will be volatile, but will largely remain the same and stay somewhere between 6.25% and 6.75%. So let me just reiterate that. I do think it's going to fluctuate quite a lot because there's just so much economic uncertainty.
And if you don't know about mortgage rates, they can literally fluctuate on a daily basis, literally.
And turmoil right now, but the Fed has indicated that they could pause rate hikes. I think there is a pretty decent chance that they go back on that and actually raise rates again, another 25 basis points over the summer. But bond yields, which are what dictate mortgage rates, remain low. If you look at this chart, you can see that we've had loads of Fed rate hikes since the peak of mortgage rates for this cycle. Yes, mortgage rates are still up a lot over where they were last year, but they were the highest that they've been in years back in November when they were at like 7.2%. Right now, they're at about 6.5%. And between November and now, we've had a lot several hundred basis points of interest rate hikes, and mortgage rates haven't really changed. In fact, they've come down a little bit, and I expect that to be the case. Now, I don't think that they are going to go down very much right now because, again, there's too much economic uncertainty. The federal fund rates remain really high, and bond yields are relatively low considering everything going on right now. So that is my number one prediction. Unfortunately, don't expect a lot of changes in mortgage rates right now. Number two prediction. Home prices will rise from winter lows, but will stay down year over year on a national basis. Every single year, housing prices tend to peak in the summer, and then they go down in the winter.
Boom. Yes. So when he says going down, right, that doesn't mean we're going down. The median price in Orlando is around 420. We're not going to go from 420 to 270 in the winter, but they settle down because it's holidays, right? It's always, and this is another video, by the way, that actually shot. You can make a lot of money as a seller selling your home during the holidays, right? But, majority of people have that concept. We just want to be with the family, don't want to do too much, and they tend to not list their homes during the holidays, which is why you'll see prices slowly going down.
This is known as seasonality. And so what I'm saying with my prediction is that I do think seasonality will return to the market, and we will see the median home price in the United States climb from where they were in January, February, or March. That said, I still think they will be down from where they were the previous year. So we are probably going to remain towards that 2 to 3% year-over-year decline that I talked about at the top of the show. I actually think there's a decent chance, it's not a huge chance, but there's a decent chance that we could see year-over-year growth in the housing market on a national level in August or September. If you just look at this chart here from Redfin, you can see the orange line is this year, it's 2023, and you can see that it is median sales price is starting to trend upward according to seasonal patterns. But when you look at what happened last year in 2022, you see an abnormally large decline starting in June and July. And so if regular seasonality returns where, yes, things start to decline in June and July, but not as much, we could actually see year-over-year growth in the market, which is definitely not something I thought I would be saying at this point in the year. For my third predictions, I said that home sales, the total volume, the total number of home sales, will pick up modestly, but will stay extremely low year over year. One of the main things that has been driving housing market behavior and activity over the last year is that a lot of people just aren't selling and a lot of people aren't buying.
And they're not selling because they're sitting on 3% interest rates. So if it's not like a monumental life-changing event, people are staying. Job transfers, you have to sell. You're having more kids, you need a bigger house, you need to sell. But other than that, a lot of people are not willing to trade in that 3% interest rate for 6.5%, 7%.
Brought the total amount of home sales to an extremely low level. If you look at year-over-year data here from Redfin, you can see that they are down 20%. So home sales are down 20% from just last year, and they're down far more from where they were in 2021. Unfortunately, I do think that is going to continue because of my fourth prediction, which is that new listings, the amount of homes that are listed for sale at any given time, will be the lowest on record in July and August. The lowest they've ever been, I should say, in July and August.
This is on point. Inventory is still low. If you guys been watching it, our inventory is still low. Last time I was looking is 2.7%. Or not 2.7%. We have 2.7 months of inventory. For a balanced market, you want to be at about 4 or 5. So you can already see how low it is at this current time.
Yes. And for those 2 months, they will be the lowest July ever and the lowest August ever. This has been playing out for months. And if you look at this new listings chart from Redfin, this is seasonally adjusted national data. You can see just how low the number of new listings are, and it is continuing to trend downward. Frankly, I don't see anything in the housing market that is going to make people start listing their house more and more, even they haven't over the last couple of months. So I think this trend is going to continue, and this is going to be a major factor in the housing market over the next at least 3 months and maybe beyond, because people just aren't listing their houses. And that means that inventory stays low. It means that the total number of home sales stays low, and it puts upward pressure on home prices. This is one of, if not the most important reason why the housing market is not crashing despite higher interest rates. It's because there's just not a lot to buy. When you put that in supply and demand terms, even though that interest rates have gone up and demand has come down, supply has also come down, which helps moderate price declines. For my fifth and my last prediction is that regional differences in the housing market will remain and maybe even get more dramatic. We've been talking in the first four predictions, we were talking about national level data, but as you probably know, housing markets are very, very regional. My predictions are that the Northeast will see the strongest price growth, followed secondly by the Midwest and the entire country. These markets just have very, very little inventory, and that will put upward pressure on prices in the Northeast and the Midwest. In the South, I think it's going to be a mixed bag. In the South, you see really strong markets like Miami is just going crazy right now, and there are weakening markets like Austin, Texas. So I think
Orlando's another one, most magical place on the planet. A lot of people come in here already because of Disney theme parks, families, secondary homes as well. Yes, Miami is much higher in regards to pricing, but we still get the same influx. The three main cities people are moving to in Florida are Miami-Dade, Orlando, and Tampa.
If you're in the South, if you're looking to invest in the South, it's really market by market basis. That's true everywhere, but I think the South is the most difficult to categorize as a region as a whole. In terms of the West, I actually think we're going to see certain markets continue to struggle. Austin, again, I'm going to call that out. Boise, Las Vegas, I think are all markets that are going to continue to struggle this year. But I think there are some markets that actually have been sort of leading the declines across the housing market that are going to start to recover. One that really pops out to me is Salt Lake City. We've seen, it was down a lot over the last 6 months, but I think it's going to bottom out and start to grow again. I think Denver is another market that could do that. Even Seattle's a little bit riskier, but it could start to bottom out and start to grow at least modestly in a year-over-year fashion. That said, I think the spread between the fastest and the slowest growing markets is going to be huge, right? Like over the last couple of years, we got accustomed to everything going up. The worst performing market over the last couple of years was growing at 10% a year, whereas the highest were growing 30% a year. That 20% spread is a lot, and I think that 20% might continue, but we'll instead see 10% positive growth and 10% negative growth. So the spread of outcomes in different regional housing markets is going to be huge, in my opinion. Okay, so those are my 5 big predictions for the summer of 2023. I just want to reiterate that when I talk about predictions, I usually am talking about my quote-unquote base.
I think they were pretty solid. I mean, for the most part, he wasn't completely off base with a lot of stuff that can relate to the Orlando market. As we know, the summer times, hottest time of the year is seasonal, right? And then the winter, it slows down. And also the areas that people are migrating and moving to, even though we're in a weird spot with interest rates and stuff like that, slowing down the market. Did mention places like Florida are still having an influx. So guys, as you know, my contact information is going to be in the comment section below. Don't hesitate. Call me, text me, direct message me for any questions you have in regards to your particular real estate scenario. We can talk it through, put a plan in place to take advantage of the market and make it happen for you and your family. And always remember, in real estate, there are only 2 people that can get you exactly what you want, okay? That's D and you. Talk soon, guys. Peace.